Good morning and welcome back to Almus Market Mornings. There has been a substantial repricing of market expectations for a rate cut in the Fed's December meeting. Yesterday, a whole host of Fed members made comments, and it's clear to everyone now that December cut is not a walk in the park. There has been a lot of risk aversion sentiment with high momentum equities taking a beating. The probabilities for a December rate cut has reduced to about 50%, while dollar is trading slightly weaker. Good morning, JK. It seems the Fed members yesterday reiterated what Chair Powell has been saying for some time. What's your thought on this?
Morning, Swaraj. Yes, I think increasingly we are seeing Fed members expressing their caution about going off with further rate cuts, particularly as inflation remains sticky above 3%. Some members are even expressing that employment situation is not too much deteriorating. You pointed out to around only 50% chances of a rate cut in December. Look at it. When Powell first spoke about a December rate cut being not conclusive expectation, dollar actually strengthened. Now, with the expectations coming even lower, dollars actually weakened. So that's a quite a important observation on the dollar because it's not just the rate prospects for the US, but other factors are also, guiding the dollar now. More importantly, dollar has now become a risk currency in perception of investors. Yesterday, we have seen risk off sentiment taking over, a broad sell-off in the US markets, both in the Dow, which had hit all-time high just a day back, and also on the tech sector. Investors reducing their overstretched positions and taking some profit ahead of the year end. And I think economically, what we are observing is that the shutdown is no doubt over with the House also passing and the President signing the executive order. However, there is a lot of fog about where the economy is right now. We have not had economic data for the last 40 days. Now, whatever the numbers that will be announced will be incomplete. According to White House economic advisor, the government would release the closely watched employment report for October, but that will be without the jobless rate. So that's a very important point that the market looks out for. And yesterday there was also a report that the CPA for October may not be released at all. So we are actually not clear where the economy is. And more importantly for the Fed, they are actually walking blind now without the official data on the inflation and the economic situation. So that keeps the investors a bit uneasy. And one of the factors why I feel investors are playing a bit caution and keeping their positions slightly, lesser, even as these stretched valuations are also being pointed to. Many large investors have flashed a red flag about the markets, and so that actually is leading to the big sell-off, and it's also had its toll on the Asian market, where Japanese and the Korean markets particular, and even the Australian market have come off, and Indian futures are also showing somewhat negative. So in this situation, normally you would have seen the dollar strengthening, but what I'm pointing to is that the risk of sentiment means even dollar gets sold off, and they see the reversal of roles even for the euro. Euro for some time earlier, last year and all, was being seen as a risk currency, and whenever there was a sell-off in the assets, euro used to weaken against the dollar, and that is actually reversed. Now euro is getting bought. Euros now at a level almost close to a level from where it broke down post October 29 for Powell's statement. So we are at 1.1640. We were at 1.1670 at that time. So it is almost retraced all of its losses that it suffered in the wake of Powell's statement. Another important thing to note is that even the gold is now becoming a more of a risk asset. No doubt, central banks are, sustained buyers, and their positions are not going to be, down or anything. They will hold for long, but then there are also large number of investors' interest and trader interest that has emerged, and therefore it has become more of a risk asset. I would say it's still a safe haven asset at some level, but at elevated levels it becomes a risk asset, and that's why we have seen even the gold has got sold off yesterday in the face of the fall in the US asset markets. So that's something to take note of. Overall, dollar is now at 99.20, not able to break the 100 mark conclusively on two attempts, and now important support lies at 98.50 and 98, and below the latter there's a good chance that the medium term downtrend will restart. However, I don't think that will happen this year. We may still be in the 98 to 100 range for the dollar, and for the euro between 1.15 and 1.1750. This is the boundary I see for the next several weeks until the new year at least. On the one more point on the dollar is that this UK pound was under pressure because a host of data from UK has been weak. Yesterday's industrial production and GDP numbers were weak. Despite that, UK pound has somewhat bounced back to around 1.315060 level. It had seen a level of 1.3050 as well. So the weakness of the dollar has actually helped the pound to recover, despite expectation that UK will also cut rate in December. So all factors pointing to some inherent weakness in the dollar playing out. Of course, it's not if you come to the emerging market, it's not so uniformly weak against the currencies. South Korean won hit new low that was seen last in 2010, and South Korean authorities were pointing to actually indicating that they are ready for intervention. Rupee again not really getting help from the dollar's weakness. We have seen it trade closer to its all-time high at 88.80 in the offshore market after the asset market sell-off. But of course, I do expect it to be held. We have an important event in the politics. Bihar state election will be announced. Election results will be announced today. Market will be watching out for the outcome, whether it's a victory for the ruling coalition NDA, and what is the margin of victory. So these will actually add to the political premium or erode it depending upon how the outcome comes. But two facts make me a bit positive on the rupee. One is now data shows that the FII holding in Indian equities has fallen to 15-year low, and that's a very big fact. They have in the last 1 year itself, they have actually sold stocks worth more than 2 lakh crores. So that means FII holding has been at a very low level. Now with time correction and even price correction, and another fact that some of the companies have actually reported better numbers than what was discounted, there's a good case for FIs returning, and that can see the flow situation improve. What is keeping the rupee pressured is the fact that while we run a current account deficit of around 1%, the capital flows, which usually is to fund it, has been missing, necessitating RBI to fill the gap, and that situation might change. And we also, the other fact I wanted to point out was quite a few global investors, investing houses are actually indicating that India is now becoming a value buy, relative to other markets which are overvalued after the recent correction in terms of time and prices. So there are chances that with the trade deal on the annual, perhaps a good result from the state election, and if I view turning a bit positive, rupee may see some relief from its pressure. But I think we need to see the real flows until we get a stronger view on this. Thank you.
Thank you, JK. And very interesting point which you mentioned was that the characteristic of the dollar is sort of now changing. So earlier we used to have dollar rallying whenever there was a risk of sentiment. Now dollar seems to be uh, to have become a risk currency. So whenever risk of sentiment is prevailing, dollar is also coming off. Especially yesterday was a very good example because equities were coming off and dollar also came off. So a broad risk of sentiment prevailed. So this change in characteristic is quite interesting. Um, Overall, apart from the currencies internationally, rupee also did not get help from the dollar's weakness. It continued to trade near its all-time lows of 88.80 in the offshore markets. Things to watch out for domestically would be the Bihar election results, which will be announced today. And another case which JK mentioned that is building up for the rupee to sort of get some relief is the FII holdings in Indian equities, which has fallen to 15-year lows. Uh, Now, with the earnings coming off better, the case is building for the FIIs to return, which may improve the flow situation in the future. We'll see how all of this plays out. That's it from us, Ray. Thank you for listening. Have a good weekend. We'll catch up on Monday with the fresh round of updates.